What is going on, investors? Hopefully, guys are having a great day out there. Time to talk about JD.com, ticker symbol JD. The company just reported their earnings before the bell today, and we're going to go into them. We'll take a look at the revenue. We'll take a look at the profit over at JD. I'll be honest with you, I saw profit fall off a cliff over here. We'll talk about why that is here in a second. Now, JD today, after reporting earnings, was up nearly 3.33% to $65.73 per share. In the after hours, we're actually seeing this follow through as well, up another 44 cents to $66.17. Now, year to date, this stock is still down big time, down 27%. We'll talk about what all this means from a technical perspective as well. Is this the bottom in JD.com? Can you buy the dip on this one? This was a $108 stock, and now it's $66. So for many, looking like a value out there. We'll talk about that from a technical perspective here in a second. Now, what I also want to talk about is the reason, or one of the primary reasons many believe that these Chinese stocks have absolutely taken a beating, is the Chinese government is doing a quote-unquote crackdown on companies like JD and Alibaba and Baidu, and many of the largest Chinese companies that are listed here publicly here in the United States. The Beijing rules are starting to come into effect, one that affects data privacy and the handling of customer data, which you got to imagine JD.com with their millions, like literally millions. In fact, 531 million active customer accounts. I mean, considering I don't know what the population is here in the United States, but I know for a fact it's not anywhere near 531 million. So the fact that JD.com has more active accounts than there is people living here in the United States just shows you the impressive nature of these companies. And it also has given reason for the Chinese government to want to pass regulation on these companies. And there's many investors here in the United States that are concerned and are dumping their Chinese shares. This is why we've seen a massive downtrend in JD.com and Alibaba and many other stocks over the last few months as these regulations are being digested by investors. Now, the only thing that I want to say is I can't tell you what the United States government is going to do or the Beijing China government is going to do in terms of regulations. Well, what I can tell you is from a United States perspective, and I know I got a lot of viewers from outside of the United States, and I want to appreciate you for tuning in. But what I want to tell you about the United States is when the United States, quote unquote, cracks down on companies for monopoly practices or for data privacy or for any type of regulation, I'll be honest with you, it tends to help the largest companies and hurts the small startups. And the best example is during the last financial crisis, during 2008 and 2009, tons and tons of banking regulations was passed really to quote unquote hurt the big banks who the government actually blamed for the financial crisis. Well, 13 years later, what have we seen? The biggest banks here in the United States, from JP Morgan to Wells Fargo to Bank of America, have actually gotten bigger, and the competition has absolutely withered away, and regional banks and small banks have all but dried up here in the United States. That regulation meant to curtail the big banks from getting too big actually made them bigger. And whether or not China's government can regulate that way and the regulations have that same effect, I don't know. But I'm just telling you, here in the United States, sometimes when the government wants to do a crackdown, it actually makes the rich richer and the upstart competitors much, much weaker. We'll see what happens in the Chinese market. Now, one thing I wanted to show you just from an impressive standpoint here is JD.com coming in at $114 billion worth of revenue. They're growing at 30%. They highlight Amazon because I think they're growing at a similar rate, but I wanted to show you the gap between them and their next closest competitor. You got 114 and the next closest competitor is at 38 and they're only growing at 14%. JD.com has an absolute dominant position, and we saw that in the most recent quarter. They announced that they had 531 million active accounts. I tell you what, I don't know the exact population of the United States off the top of my head, but I know for a fact JD.com has more active customer accounts than there are people living in the United States. It just shows you how big the Chinese market is and how if we can get some clarity on this regulation and maybe start to see it take hold and digest it as investors, boy, I tell you what, a stock like this trading off 30% and having way more active accounts than there are people in the United States could create a massive buying opportunity for JD.com. We'll talk about it from a technical perspective here in a second, but I want to show you the fundamentals. We're going to focus on our revenues up here. We've got our total net revenues here. The middle column is actually our most recent quarter in the Chinese currency. The right-hand column is it in United States dollars. We get the same view on the right-hand side, 6 months over 6 months. The middle column is our most recent 6 months. The far right-hand column is that 6 months in United States dollars. Our total revenues went from 201 to 253 billion Chinese dollars. Excuse me for saying Chinese dollars. I know it's not referenced that, but for our American viewers, I think we can kind of understand that. Now, in terms of United States dollars, that is $40 billion. So 253 billion Chinese translates into 40 billion. Yeah, 40 billion, really 39.3 billion to be exact. But that is absolutely phenomenal. That puts it up into the likes of an Amazon, a Walmart, a Microsoft, an Apple in terms of revenue size. And I tell you what, if this company continues to sell off, they'll probably be buying opportunities when we're talking about that much revenue. Now, what I wanted to come down here is skip down to income from operations, because if it was all flat and it was relatively growing within line with our revenues, you could skip it as an investor. You don't really got to dig in here, because you're saying, okay, our revenues went from 201 to 253 Chinese. Well, and our income from operations, take a look at this, went from 5 billion Chinese all the way down to 300 million. Hello, increased cost. What the heck happened when you see this big of a drop? Now you want to come through and see where it came. Look, cost of revenues went from 172 up to 222. When you have this type of revenue growth, you expect them to have to spend more on products and those types of things. Now, on fulfillment side, the same thing. We went from, we'll call that 12 billion up to about 14.7 billion Chinese. Again, you'd expect increase when you ship more products in terms of revenue. Well, you'd expect to pay more to fulfill those things. Here's the big thing is marketing. We went from 6.8 billion up to 10.6 billion Chinese. That is $1.6 billion worth of marketing in terms of United States dollars just in a quarter. There's not many companies here in the United States that are spending $1.6 billion in a quarter just on marketing. But I want to show you, we went from 6.8 up to 10.6. That is like 3.8 billion Chinese more money that you spent on marketing year over year on a quarterly basis. That's where a ton of this income from operations absolutely got shriveled up. You see the same thing here for general administrative. You went from 1.4 billion up to this 2.5 billion. So you added on another $1.1 billion there. All things being considered, our income from operations really trended down over the last year. We see the same thing from a net income perspective. They benefited probably from the sale of a business last year. We had less of a benefit this year. We cleared just, and I say just, 477 million Chinese in the quarter. In terms of United States dollars, that is 73.9. I tell you what, you got nearly $100 billion valuation on this one. So this is a company that is, in my opinion, a little, just slightly overvalued when you factor in these numbers. You look from a forward earnings perspective, you're trading at about 48 times. Yeah, you could look at an Amazon and say that's probably about where they are. Walmart's way under that. Costco is as well. Home Depot, Kroger, all these other ones. I know that JD and Amazon have this massive growth rate, and so it could be that investors are just willing to pay up for that. The other thing that I'd want to figure out with JD.com is this marketing? Can we expect this? Look, are we going to go from 10.6 up to like 15 billion next year on a year-over-year basis? We'll see what happens. That certainly just absolutely bolstered their active number of accounts. Okay, their active number of accounts went up 27.4% to this 531 million that we talked about. Well, it better have when you went from 6.8 billion up to this 10.6 billion on the marketing side. Now, all things being considered, still a very, very nice company. We just have to factor in that last year the valuation made a ton of sense from a revenue and an income from operation perspective and a net income perspective. And now it makes a little bit less sense because these have been shriveled up over the last year, primarily due, in fact, to marketing spend. Now, from a technical perspective, JD.com, I put a line in right here and I'll kind of swiggle it around just in case you're on a cell phone or something. Stock's trading down here about $66 per share, 66.21 to be exact. Is this the bottom? Are we forming a bottoming formation? Well, maybe, okay, maybe. And I'll tell you how you can actually figure that out in the couple days. Look, we don't know if a stock is bottomed until looking back into it in hindsight. So the first thing I want to emphasize is you do not want to actually try to attempt to pick the bottom here on JD. The first thing to realize is this thing is in a very, 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 very steep downtrend. And the first thing that could happen is we could break above it. That could reverse trend, or this downtrend could just shallow out a little bit. Stock's still going to go down. It's just not going to go down as fast because we've gone from 105, 106, 107 on this one. And in just a couple of months, we've come all the way down to $66 per share on this one. What you're looking for here is a higher high. Take a look. High, lower highs, lower highs. It looked like really quickly we reversed trend here. Okay, right at about $80 per share, we came down here to about 66, right where the stock is right now, came all the way back up to $80 per share, but then got rejected all the way down here back to 61, came back up, back down. We've retested this $61, $62 per share range twice with JD. That is a critical level with JD.com. So if you come back down, if the downtrend continues with JD.com, you're looking for it to hold $61 per share. If it does not hold $61 per share and this downtrend is still intact, there is not a lot of things that is going to support this stock underneath this. This is why the buyers have stepped in here at 61, 62, because they know if we break $61, $62 per share on JD.com, the air could fall out of this one very quickly, and you could easily come down to 55, 50, maybe even as low as 40, $45 per share on this one, okay? So that is the first. I'm just explaining your downside risk. Now, whether or not to determine this is a bottom really would depend on the action all the way up. And I'll tell you how I would invest in this one. And it might be a little bit different than what you're used to and what other people might preach out there. There are several levels of support here, but the most critical one, in my opinion, is right here at $80 per share. And I'll put my line actually above that because what we're looking for is actually a break above the $80 per share. And you might say, well, Investor Channel, dude, why would I want to buy? Why wouldn't I just buy down here at 66 and have it come all the way up to 80? That's a phenomenal gain. Well, I tell you what, we came down to $65, $66 per share on this one, came all the way up to 80, only get to reject it all the way back down to 60. And this happened just over the last month or so with this stock. And so really, for me to prove that this is a bottom, that the trend is reversed, I think you want to get above $80 per share on this one. And you'll ask yourself, well, I missed the whole move from 65, 66 to 80. Well, no. If you get above $80 on this one, first of all, number one thing is momentum will be on your side. Number two, the technicals will have shifted. The downtrend will be over, okay? Because take a look. You got a big old downtrend on this one, and you can draw this line in however you want. You get above $80 per share, and that downtrend is gone. And now you would actually be in an uptrend. You would be in an uptrend with momentum with JD.com. And that is a powerful thing because then you could go from 80 back up to 85, 90, 95, 100, 107. Again, the stock market, in my opinion, is not about picking the exact bottom. It's not about loading up on the bottom, trying to pick the top, pick the bottom. No, what I want to do is play momentum and trend. And right now, the momentum is down. The trend is down. To think you're going to step in there and pick the exact bottom might be as lucky as saying, I'm going to go pick the 5 winning lottery ticket numbers this week, and I'm going to hit the $50 million lottery. It's the same type of thing. Whereas if you wait for the momentum to turn around in this stock, which in my opinion, you need this stock to get back up at least to $75 per share. And really, to be absolutely confirmed, you'd want to be up above $80 per share. The momentum will be on your side, and absolutely the trend will be broken. You'll have taken out the previous highs here, and now you'll be back on an uptrend. So that's what I see from a technical perspective with JD. I know a lot of people are going to say, I want to buy down here at $66 per share. I tell you what, the Chinese government comes out with some headlines. Look, these are headlines, and they're negative here in the United States. I know we got a lot of international viewers here on the channel, and I appreciate all of you tuning in from Hong Kong to Japan to Australia to the United Kingdom. I really appreciate it, but just understand, American investors are very, very, very wary about what's going on over in China for a number of different reasons. And they're very concerned. Not only that, here in America, if I want to invest in retail, I can buy Walmart, I can buy Amazon, I can buy Kroger, Home Depot, Costco, Walgreens, Target, Lowe's, Best Buy, on and on and on. There's a lot of options for me here in the United States. That yes, there are some political tensions with these companies, but not nearly what we're seeing over in China. And what we don't know about the government in China in the United States kind of makes us nervous, and we'd rather avoid these stocks. So I just want to let you know that investors here in the United States are incredibly negative. The sentiment on these stocks is incredibly negative. Maybe where you live and your neck of the woods, it's not necessarily the case. But I would wait. I would wait until you get confirmation of a trend reversal here and a sentiment reversal as well. Having both or 3 of those things on your side will create a much, much more profitable trade and give you much, much higher odds in having a winning JD.com trade. But at least for the current day, JD is up, and we'll see in the coming days and weeks ahead if it can reverse trend and start to head back up. This is an absolutely stone cold dominant company in the country that it operates in, and it certainly would be an excellent addition to your portfolio if we can get more clarity and more support from a technical perspective on this one as well. That was JD.com. Hopefully you guys have a great day. Good luck with your investments.